Hello everyone, I'm Donnie Merrick, Executive Director of Risk Management for Alvin Independent School District, and I'm here to talk to you a little bit about open enrollment, provide this video for you to help you through the enrollment process so that you have the information at your fingertips while you're in the enrollment system. So when you log into the enrollment system, make sure you have this video available so the two will work together to help you with a smooth enrollment. This year we're going to continue with Benefit Focus for our enrollment platform. We've been with them for several years now, so it'll be very familiar to the returning employees. New hires, once you create your login information and get into the system, you'll be able to navigate the website easily. It'll guide you step by step through the entire enrollment process. It will provide you all the information that you need for each specific benefit, and it's a very user-friendly site. So with that being said, our enrollment is July 14th through August 9th of this year. That is the window. It starts this Thursday and it'll run through August 9th. That is the window that returning employees have to complete their enrollment process. Keep in mind, new hires, you have 30 days from your hire date. So that August 9th deadline doesn't necessarily pertain to you. We need returning employees to know that that is a hard date, and if you do not complete your enrollment by that date, August 9th, then you could potentially be without your benefits. Put it in your calendar that the enrollment window is July 14th through August 9th. This is a passive enrollment this year. That means that if you do not wish to make any changes to your enrollment, everything that you have currently in this plan year, the 2021-2022 plan year, will automatically roll over into the 2022-2023 plan year, with the exception of the IRS benefits. And there are three. That is Medical Flex, Dependent Care Flex, and the Health Savings Account contribution to your HSA. Those three have to go in and be re-enrolled for every year. If you do not participate in any one of those, then you do not have to do anything at all. If you do want to participate in Medical Flex, Dependent Care Flex, or if you do contribute to an HSA, it is mandatory to go in to Benefit Focus, the enrollment system, and re-elect your dollar amounts. That is very important, and if you do not do that, you will be without those benefits this year. Even though it is a passive enrollment where everything will roll over, I highly encourage all of our employees to go into the enrollment system. Go into your account, look at your benefits, review them, make sure they're what you want, what you need. Make sure that your elections are correct as far as your life insurance numbers. Do you need short-term disability or long-term disability this year? Do you need to change from one medical plan to the other? Do you need to add a dependent, take off a dependent? That is what open enrollment window is for, to make changes, adds, drops, etc. So please, even though it's passive, I highly recommend that all of our employees go in, look at their benefits, make sure that they have what they want and what they need. Make sure you understand the benefits that you've elected. If you're curious, if you have questions about that, this video can help you learn more about them. You can also contact my office and we will be more than happy to answer any questions you have. Go over your enrollment, whether it's something big, something small, short, shoot us an email and we'll help you out. The effective date for these elections, meaning your open enrollment elections, will begin on September 1st of 2022. So we're in the current plan year right now. Your open enrollment elections will not go into effect until September 1st of 2022. That is when your deductibles will start over. That is the beginning of the new plan year. It's also important to know that all the changes, the adds that you make during open enrollment will not impact your paychecks until the September 16th paycheck. So the September 1st paycheck will still be this current year's payroll deductions. And then the September 16th is the first paycheck you'll see where you notice any new changes, premium increases, things of that nature. To also help you with the enrollment process, I will be sending out an email, and the subject of the email will read Alvin ISD Insurance, Benefit Information, and Open Enrollment Guide. This is a PowerPoint presentation to use along with the video to help you with the enrollment process. This presentation provides detailed information about every one of our plans, and it will help you understand the different verbiage with insurance and medical, whether it's deductibles, co-pays, urgent care versus ER, things of that nature. So use that PowerPoint presentation that will be in the email and the video while you're sitting down and you're in the benefit focus and enrollment system. In this video, I will talk about Alvin ISD's self-funded plan, our medical options, our dental options, our vision insurance, flexible spending, dependent care flex. I will also speak about our short-term and long-term disability programs. I will speak about life insurance and our AD&D policies. I will speak about our voluntary products, also known as ancillary or supplemental products. I will speak about our universal life insurance policy, and I will end it with MetLife Legal plans. That's the new plan option that is put into the enrollment system for the first time this year. So let's get started with Alvin ISD's self-funded plan. So Alvin ISD is unique in the fact that we are self-funded, meaning we run our own health insurance program. We are not part of TRS's active care health insurance program. Years ago, we chose to stay self-funded, and it has proved valuable to us. It has helped control insurance premiums. It's allowed us to dictate our networks, which insurance we use, and all sorts of things. So we are proud of that. It helps with recruiting teachers and retaining them. So the way a self-funded plan works is that we collect premiums from the employees. That's what comes out of your paycheck every 2 weeks, and the district itself contributes their portion. So we take the district's contribution, all of the employees' contributions, we add that up, and that is our revenue. That is what we use to pay claims, okay? And so the claims are any expense to the plan as far as doctor's visits, surgeries, prescriptions, physical therapy. Anytime there's a claim, that is an expense. So we have to collect enough premium from the employees and the district's contribution to pay all of our claims. That is what self-funded means. So we have to do our part individually, you, me, all of us, to help control claims. Because if we don't collect enough premium to pay our claims, then we're upside down, and that's not a good place to be. We were that way for a few years ago, and we worked really hard as a group to take that challenge on, and I'm pleased to say over the past 2 years we have done a great job and collecting enough premium to pay the majority of our claims, and we are balanced for the most part now. It takes a lot of hard work. We have to increase engagement with our personal health, meaning we have to be responsible for our health. We have to be proactive. We need to go get our annual physicals, our well woman's checkups. They're free. Take advantage of them. Find out if something's going on with you early. Don't wait because that's what drives claims up. We need to use GoodRx when we can. GoodRx is a pharmacy program. It's not affiliated with the district. It's available to anybody, but it's a way to find discounted prescriptions. And anytime you use GoodRx, it's not going to hit our claims. So that's another way to keep claims down. We don't need to fill unnecessary prescriptions. If you go to a doctor's appointment and they write 3 or 4 or 5 prescriptions for strep throat or a cold, possibly you already have that prescription in your medicine cabinet. So look at that before you just go fill every prescription that's written to you. Always ask your doctors to write generics if possible. A generic is going to cost you less money and our self-funded plan. And then lastly, we need to take advantage of UHC's virtual visit services. This will keep you out of the doctor, out of the urgent cares, out of ERs. If you can log in, use the app, and take advantage of UHC's virtual visits. It's cheaper for you out of pocket at time of service, and it's also cheaper to the plan. And it also helps with lost time. You don't have to take half a day off to go to a doctor's appointment. You can sit at your desk, sit at home, and you can call in or use the app or the website, UHC's virtual visits, and be seen by a doctor, and they can call in a prescription that way. So those are a few examples of how to control costs to help our self-funded plan in efforts to control claims so that our premiums don't constantly always go up. So it takes a team effort, and I hope that you can be proactive this year and take advantage of some of this. All right, let's dive in and talk about our 5 plan options. First one is the PPO 1500. This comes with a lower premium, meaning it's going to be less out of your paycheck. It is a broad network, which is really important for a lot of us. For instance, I use a doctor that's in HCA hospital systems. My wife uses a Memorial Hermann doctor, and my children use Texas Children's. So this plan allows us to use a variety of networks. That's what a broad network is. This plan does not come with a prescription copay plan. That's another reason that the premiums are going to be a little lower. But don't let that scare you away. Some of us need a prescription copay plan. We have expensive prescriptions monthly, so this plan might not be for you. But others that do have monthly prescriptions, they might be generics, they might be low-cost meds, and this plan, it works perfectly for those type of prescriptions. So if you go to a pharmacy, if you have a prescription, you go to the pharmacy with the 1500, you're not going to pay $35 copay for a drug. You will pay what the drug costs. The network contract pricing between United Healthcare and that pharmacy is what you will be responsible for. That's what I mean when I say you don't have a copay prescription plan. But so for instance, I'll give you an example for me. I'm on the PPO 1500. I have 2 monthly meds. One of them is about $8. And so I run it through United Healthcare because that's the contracted price, and I pay $8. The other one is more expensive. Through United Healthcare and not having a prescription copay card, it's about $50. So I researched the GoodRx price. It turns out that same prescription cost on GoodRx is $31. So when I go to fill that prescription, I tell the pharmacist, please run this through GoodRx, and I pay $31. So the other benefit is that prescription doesn't hit United Healthcare's claims. It's just a payment that I make to the pharmacy, and it's ran through GoodRx. So as long as you can manage your prescriptions and have an understanding on how to do that, which my team and I can help you, the PPO 1500 is a good plan for a lot of people. This plan and most of our plans comes with 4 office visits at copay. So what that means is that you get 4 visits, your kids get 4, your spouse gets 4, anybody on your plan gets 4 visits throughout the entire plan year, where when you go to a doctor, your primary care or a specialist, you will pay copay, right? And then the plan picks up the rest. After you've exhausted your 4 copay visits from 9/1 through August 31st, then you're in the phase of the plan where you will pay for that entire visit. Okay, so we have to put a cap on the amount of visits that we give at copay to help control the costs and help protect our self-funded plan. Once you meet deductible, so let's say I've exhausted all 4 of my visits at copay, I will now be responsible for the entire cost of those visits until I meet the $1,500 deductible. Once I meet that, or any individual meets that deductible, then the plan's going to pay 80%, and you would be responsible for 20% of your visits from there. So the first stage is you get 4 copay visits to doctor's appointments and specialists. Then you're in the deductible phase where you're going to be responsible for the entire cost of the visit. Once you meet deductible, then you're in the co-insurance phase, and you would pay 20% of each visit. So be smart, be mindful. The plan also offers 1 urgent care visit at copay for you and then anyone on your plan. So that's another visit. Once you've exhausted that 1 urgent care visit, if you had another one sometime throughout the plan year, you would be responsible for the entire cost. Unless you've met deductible, then you would only be responsible for 20% of it. This plan comes with a free annual physical, and for women, you get both the free annual physical and the Well Woman's Checkup. So there are a variety of visits allowed on this plan, As long as you understand it, you can manage your medical. So let's recap that you get the 4 office visits at copay and 1 urgent care. You get your free physical exam and or well woman's visit. You get to use United Healthcare's virtual visits unlimited. Those do not go towards an office visit. The annual physical and well woman's, they don't go towards one of your 4 copays. So there are a variety of opportunities to go see a doctor on this plan. So now let's talk about the PPO 1750 broad and compare it to the PPO 1500. Show some similarities and the differences. The PPO 1750 broad is going to be our most expensive plan premium-wise. It is a broad network like the PPO 1500, meaning you can go to various doctors, which is very important on this plan. This plan comes with a prescription copay plan. So that is the biggest difference. So if you have a family that needs multiple networks and a pharmacy card or a prescription card, this might be the plan. This is the plan for you. It performs because of the broad network and the prescription card. It costs our self-funded plan the most money, meaning that it's an expensive plan both for the employee premium-wise and the self-funded plan. This plan comes with a prescription deductible, meaning that the first time you fill prescriptions during the plan year, you're going to have to meet an individual prescription deductible of $100 and family of $300. So if I go to fill a $40 prescription on the PPO 1750 in September, I will be responsible for that entire cost. But once I've come out of pocket $100 towards prescriptions and I go to fill that same prescription in November, then I'll just be responsible for the $35 copay, if that makes sense. Again, this is an open network, so you can use any doctor, provider, facility, lab, surgical center. You're not obligated to just go to a narrow network. This plan is intended for our members with chronic illnesses, expensive and or multiple prescriptions, and for members that need to use multiple healthcare systems. Just like the PPO 1500, this plan comes with 4 office visits at copay and 1 urgent care visit at copay for each person on your plan. So you yourself get 4 visits, your spouse would get their 4, and your children would each get 4. So it also comes with the free annual physical and well woman's, very similar or exactly like the PPO 1500. So the PPO 1500, the PPO 1750 broad, they're both broad networks. The 1500 does not come with a prescription copay plan, and the 1750 does. You can use GoodRx on both of these plans. They're very good plans for everybody. You just need to know which one meets you and your family's needs better. Now, if you want a little bit more savings out of premium, we have 2 models that are called ACO models, Accountable Care Organizations, and we'll talk about both of those right now. The first one is Kelsey. The second one is Memorial Hermann. Both of these are 1750 deductibles. The Kelsey model is going to be a little bit cheaper than the Memorial Hermann model, premium-wise. These plans are great because of the narrow network, you're going to see savings to the self-funded plan. You're obligated in the Kelsey model to find a Kelsey primary care physician, and if you go to a doctor's visit and they need to refer you out to a specialist, they're going to refer you to a Kelsey specialist. And when you stay in their system and navigate your medical needs, they use one electronic medical record, and so they're able to track each visit, and the specialist can look to see if the primary care physician ordered a certain test, certain blood work, and they won't repeat tests. And so that's going to help control costs. One of the huge benefits for the Kelsey plan is that it does come with a prescription copay, just like the 1750 broad. So if you're someone that needs a prescription copay card, but you don't need multiple networks and you want to save significant premium dollars, I highly recommend you look at the Kelsey option. It's going to save you a lot in premium. You'll still have the ability to fill prescriptions and use the copay card, but you will stay in the Kelsey network. Kelsey is a Houston-based company, so they surround our district. There are Kelsey locations in Pearland, Pasadena, Clear Lake, Sugar Land, Houston, and so there's a lot of options for you to go to depending on where you live. Kelsey might not be for our employees that have kids that are off at college in another town. Let's say your kid goes to school in Lubbock at Texas Tech or Texas State in San Marcos. There's not Kelsey clinics there, so your children would not have the benefit of being able to go see a Kelsey doctor really quickly. But if they are in U of H or somewhere closer to Houston and they can come back down for their visits, then it might be a good plan option for you. So keep that in mind when you're selecting it, that it's a Houston-based company and that you're not going to want your college student kid that's far away not be able to take advantage of their services. This plan as well comes with 4 office visits at copay for everybody on your plan, you and your dependents and your spouse, 1 urgent care visit at copay, and you do get the free annual physical and or well woman's checkup. The Kelsey plan is very similar to the next one we'll talk about, the 1750 Memorial Hermann option. Very similar, meaning that it's a ACO model. If you choose this plan, you're going to pay lower premium dollars. It comes with the prescription copay, and you will have to select a Memorial Hermann primary care physician. They will dictate if you need to see a specialist, and if you do, they're going to refer you to a Memorial Hermann specialist. The biggest difference between Memorial Hermann and Kelsey is that Memorial Hermann is a hospital system, so they do have actual hospitals. So if you have an illness that ends up needing to see a specialist and then potential surgery, you will stay in their system all the way through the primary care visit, the specialist visit, and then the surgery, whether it's inpatient or outpatient at a Memorial Hermann hospital. Whereas Kelsey is not a hospital system, it's just doctors, a group of doctors. They have facilities, but if you were to need a surgery with Kelsey-Sebold, they would refer you out to a partnering hospital system like St. Luke's or Methodist, whoever they partner with. The Memorial Hermann option does come with the 4 office visits at copay, the same as the other 3 plans. One urgent care visit. You get your free physical and free well woman's checkup. With the Kelsey plan and the Memorial Hermann plan, you do get to use United Healthcare's virtual visits, which is a great option too. So those 4 plans have a lot of similarities and some differences, and it is very important for you to understand them so you can decide what meets the needs of you specifically if you're an employee only, or you and your family if you're an employee and family. The next plan we're going to talk about is very unique. It's completely different than the other 4 options we just said. In my opinion, is one of the better plans that we have. It does not meet the needs of all of our employees, but I strongly encourage all of our employees that don't use our medical insurance a lot, that don't have monthly prescriptions, that don't go to the doctor all the time, to consider the HSA 2800. This is a high deductible plan that comes with an HSA, a health savings account option, and it's going to be by far our most affordable plan. In fact, the employee-only cost to you out of each paycheck, if you're by yourself, is $0. You would not pay $1 for your premium if you're an employee only on the HSA. And so the idea of that is to drive people to that plan because there's a less liability, less cost to the self-funded plan. We want our employees to go on that plan in efforts to help control costs of the self-funded plan. It has the attached health savings account to it, the HSA, meaning you pay less in premium with the idea that you're going to put money out of each paycheck onto your HSA card. That allows you to set money aside into a savings account that is used for medical expenses if and when you need it. You could put up to $2,800 a year onto that plan or on that card, and if you do participate in the HSA, the district will match up to $400 into your HSA card for you. So that's a huge benefit. But the downside to this plan, or why it is more affordable, is that you are responsible for every expense until you meet that $2,800 deductible. Meaning if you go to a doctor's appointment, if you need a prescription, you will be responsible for the entire cost of that until you meet that $2,800 deductible, which can be scary. But if you load up your HSA card each month and you're not one that goes to the doctor all the time, and all of a sudden you do need to go, you should have some money set aside to help you with that cost. It's almost like a self-funded plan for yourself. Once you meet that $2,800 deductible, then the plan will pay 80% and you will pay 20%. So there is a safety net. Hopefully, if you're an HSA participant, you won't ever meet your $2,800 deductible. But if you do, then the plan's going to pay 80% and you would pay 20%. On this plan, you do get your free annual physical and/or well woman's checkup, so that is a free visit or two for you. I highly recommend that you understand and use GoodRx for all your prescriptions on this plan, because it could save you money there, and use the virtual visits when you get the opportunity to do it. I like to give this example. I was a participant of the HSA a few years ago, and I basically traded my PPO 1500 and my Flex dollars, and I jumped on the HSA and contributed the same dollar amount that I spent on those two things into my HSA. So I was contributing quite a bit into the HSA, my health savings account. So starting in September, we were cruising along. I remember I have a wife and 4 kids. We were cruising. I was loading it up. Everything was going great. We were controlling our prescriptions. Everybody was, taking advantage of their free physicals. We were using Teladoc when we needed it. And I got all the way to March, and I had quite a bit of money in my HSA. I was excited. And then all of a sudden, my 5-year-old at the time, he had an accident, slammed his finger in the door, and went to the urgent care. They sent us right to an ER, and by the next day, we were scheduled for a surgery. And I was pretty bummed out because he was having surgery, but also the financial side of things. And when we checked into the surgical center, they wanted the money towards his deductible, and it was like $2,200. And I was bummed out. I was like, $2,200. But then I realized, hey, I'd been contributing to my HSA. I'd been putting money aside, and I actually had that amount on my HSA card. So I handed it to him. They swiped it. And next thing you know, he's having surgery, and that money I had saved from September through March was there to pay for his surgery. So if had that accident not happened and he didn't need that surgery, I would have been able to keep contributing to that each month, and then I would have been able to roll over every dollar I had saved onto my HSA into the next year. And ultimately, that's the goal, is to keep contributing into it year after year after year, and hopefully eventually you could have $5,000, $10,000 in your HSA for any medical expenses that you might have come your way. You keep it forever. If you were to leave the district, go to another district, retire, that money on your HSA card is yours to spend on medical. You can spend it on yourself. You can use it on a spouse, your dependents. Ultimately, like I said, we would love for more participants to go to the HSA and manage their health insurance here, save premium dollars, and then load up their HSA for times that, emergencies or if they have medical expenses. Remember that doesn't come with the prescription copay card, similar to the PPO 1500. So you have to understand how to use GoodRx, remind doctors to write generics, those things to help you with that plan. Now, if we have employees that do not need our health insurance at all, they're on a spouse's insurance or military insurance, so we provide a benefit to you as well. So if you waive our insurance, if you waive our health insurance, you will, in the enrollment system, you'll have the opportunity to sign up for the HIB, the Hospital Indemnity Benefit Option. And this is just a benefit that we give our employees that are not on our health insurance. It comes with, it's $0 out of your paycheck. It is not health insurance, it's just a benefit. It includes a free $50,000 basic life insurance. So all of our employees that participate in our health insurance get a $10,000 life insurance policy for free. The district pays for that. If you choose the HIB option, it's going to bump that $10,000 up to $50,000. It comes with a $150 per day hospital indemnity benefit, meaning that if you were admitted into the hospital throughout the plan year, your spouse's health insurance is going to cover the cost of whatever you're in the hospital for. You would be able to file an indemnity benefit with us and receive $150 for each day that you're in the hospital. Remember, it's not health insurance, it's just another benefit to help incentivize you for being on a spouse's plan. It's also going to give you, the employee only, a free dental on the core plan. So you would notice that your premium would go to $0 if you choose the HIB option. And it's also going to give you free vision insurance. So to recap the benefits, that if you choose the HIB, is a free $50,000 basic life insurance policy, the $150 per day indemnity benefit, free dental, and free vision. Additional medical benefits that Alvin offers our employees, we've talked a little bit about them already, are the virtual visits. That's a $25 cost to our employee at time of service. So we used to use strictly Teladoc. Now we've expanded it to UHC's virtual visit platform. And again, it's $25 per visit. So if you're not feeling well, you need to see a doctor, but you don't want to schedule an appointment, you can log into the website or use the app and communicate with a doctor through the telephone or through a virtual visit, and they could prescribe you medication and you could pick it up, and it costs you $25 and it costs the plan $25. Saves on lost time from work, so we highly encourage all of our employees to be familiar with the virtual visit option and take advantage of it. We talked about GoodRx. Each and every one of us should understand how GoodRx works. You can go onto their website, goodrx.com, or download the GoodRx app onto your phone. Anytime a prescription is written to you, plug it into their app, see what it costs. It's going to give you an options at any pharmacy that's near you, and it's going to be different prices for Walgreens, Kroger, HEB. Find the one that you like, and you can go there and fill your prescriptions there. Anyone can use it, and I highly recommend that you understand the cost of GoodRx versus running it through United Healthcare. Alvin ISD also offers an employee assistance program, also known as an EAP. This is a free benefit to you, free benefit time of service. And this is a good way to get assistance for all sorts of needs. Therapy visits, financial assistance. It's an opportunity to talk to licensed therapists to help you through tough times. If it's something that you might not need, I still want you to be aware of it so you could help a coworker if they need it. Your spouses can use it. So if your spouse is going through a difficult time, your kids, it's a great way to get some therapy help, to talk to somebody about some personal issues that you might have. It's confidential. I will never know who participates in it, what y'all discuss. It's a relationship between you and the provider itself. So please remember, let your fellow coworkers know that we offer this service so we can help people through tough times. We also talked about the free district paid life. Any employee that participates in one of our medical plans gets a $10,000 life insurance policy for free. And if you waive our medical but sign up for the HIB plan, yours gets bumped up to $50,000. So those are some benefits that we need to be aware of and take advantage of. All right, let's move on to dental insurance. Our dental program is going to be with United Healthcare again this year, and we're still going to offer the two plan options, the core and the enriched, so there's not going to be a lot of changes to our dental program this year. The core plan is our basic plan. It's the lower premium of the two. Comes with 2 free cleanings. It's a 170/40 plan, meaning the cleanings are paid at 100%. The middle of the road services are paid at 70%, and the more extensive procedures are paid at 40%. It's got $1,000 annual max per person on your plan. Benefit is capped at $1,000, and it's got $1,000 orthodontia benefit for your dependents under 26. It's capped at $1,000. Whereas the enriched is the buy-up plan. It's going to cost you more out of each paycheck, but it comes with richer benefits. The premiums are going to be higher. You still get your 2 free cleanings, but it's a 180/50 plan, meaning the cleanings are at 100%. The middle of the road services are paid at 80%, and then the more extensive procedures like root canals, crowns, things of that nature are going to be paid at 50%. So it pays more at time of service. The maxes are also higher. So you'll get a $1,500 annual max per person on the benefit, and a $1,500 orthodontia benefit. The enriched plan also comes with a little bit better out-of-network benefits. So if you love a dentist that doesn't participate in United Healthcare's network, you might look at the enriched plan because the benefit is going to pay a little bit better than it would on the core. We always encourage our employees to find dentists and orthodontists that are in network, but we understand that, you know, if you've had the dentist for a long time and they choose to not be in United Healthcare's network, that you know, you might still want to go to them. So again, the core plan enriched, the same as last year, no premium increase this year, and so not a lot of change. Now we'll move on to our vision insurance. Vision is even more simple than our dental program. We're still with VSP, and we have been for years and years. There's only one plan option, so you either need vision insurance for you or your family, or you don't. If you need it, sign up for it. There's nothing to compare it to. You get one wellness exam every 12 months. You're going to get a frame and a contact allowance, and you can sign up individually. You can sign up just you and your spouse. You can sign up the whole family. But it's such a widely used insurance, VSP is, that you don't even get an insurance card. Simply tell the eye doctor that you work for Alvin ISD and that you have VSP insurance. They'll look your benefits up in a nationwide database, and you're good to go. So we have a lot of employees that use our vision insurance, and we never get complaints. They're very good at what they do, and the majority of all eye doctors in our area participate in VSP's network. Now we'll move on to flexible spending account. This is our Flex program. It's through Task again. We're not leaving Task. It's Medical Flex and Dependent Care Flex. We have a ton of participation in our Medical Flex program. It is a great benefit, and if you're not sure about it, please listen up and understand it, because it can be very beneficial to you. Medical Flex is an opportunity to choose a dollar amount that you would put onto a Flex card, a credit card. And you would get that money in September, and it could be anywhere from $100 to $2,500. And you get that money in September, and you can start using it immediately on any medical expense that you have. Medical, doctor's appointments, prescriptions, eye doctor, dentist, glasses. That money is there for you to use. The way it works is you have to pay that amount back over the course of the year through your payroll deductions. So if you flex $1,500, you divide that by 24 paychecks, that's going to be $62.50 each paycheck to pay it back. You have access to the money immediately, but you spend the rest of the year paying it back. And so I like to give the example that when I was hired by Alvin, I flexed $1,500. October came, I wanted LASIK on my eyes. It was $1,500 an eye, and so I paid cash or money out of my account for one of the eyes. I handed them my flex card, they swiped it, all $1,500 was swiped at once, and I spent $62.50 out of each paycheck to pay off my flex card. The next year I didn't have an expense. I flexed $1,500 again, and my family and I, we used that card for every doctor's visit, at the pharmacy, and dental appointments, and eventually we exhausted the $1,500, and I had 24 paychecks to pay it back. So a lot of employees like to flex their their deductible, whatever it is. Others just want to put $500 on it to protect them in case they have some unexpected medical that happens throughout the year. This benefit has a tax benefit. You'll notice at tax time that when you file, the Medical Flex will help you there, and you can roll over up to $500. So if you flex $1,500 and you only need to spend $1,000, $500 can roll over to the next plan year. So you're not obligated to spend it all like years past. Please know that up to $500 can roll over year to year to year. The other option is Dependent Care Flex. This is for our employees that have kids in child care. The main purpose for this is the tax benefit that you get. You're going to be spending money at child care, which can be very expensive. So if you run it through the Dependent Care Flex program, you'll get a tax benefit at tax time. The enrollment system does a good job of explaining this to you. Please take a look at it. My assistants, Aaron and Caitlin, understand this program very well and will be more than happy to talk you through it, help you set up the payment options. But it's definitely worth looking into if you have children in childcare. Remember that current and new participants must enroll and choose your election amount for the Flex. It's an IRS product, so we have to go into the enrollment system every year and select that dollar amount. For example, I don't plan on making a lot of changes to my enrollment this year, but I will have to go in there and elect my $1,500 for my Flex card that I do every year. If I fail to do that, yeah, I'm not going to have that $1,500 for this year. So please remember, even if you're not making any changes, go in and re-enroll in your Flex if you want to participate in it this year. We will move along now to the short-term and long-term disability. This is a voluntary product. It's administered by Lincoln Financial Group. Short-term disability is a product that allows you to recoup some money back in case you miss time from work for a medical reason. So a lot of our ladies that plan on getting pregnant and having a baby in the near future sign up for short-term disability because they know that they're going to miss at a minimum 6 weeks of work. And this is an opportunity for them to recoup some of their paycheck when they start missing work. Based off of two things, you get you have to select an elimination period, how long you will miss work before you can file the claim, and then a percentage amount of your weekly salary. So if you choose a larger percentage of your weekly salary and a shorter elimination period, you will pay more in premium. If you choose a longer elimination period, like 31 days, and the lower percentage of your weekly salary, your premium is going to be cheaper. And the enrollment system does an awesome job of giving you every single option to choose from. You can literally click on it, it'll tell you what it's going to cost you each paycheck. It's based off your salary, so we're all going to be different depending on our salaries. So if you're someone that is going to plan on possibly getting pregnant soon, if you potentially have a surgery that you might have at some point, this product might be for you. Keep in mind that there are pre-existing conditions, so if you're not signed up right now but you are pregnant right now, don't sign up for it with anticipation of it paying for this delivery coming up because you're already pregnant, you have the pre-existing condition, so it wouldn't pay out. But if you're just thinking about getting pregnant sometime throughout this school year and you sign up for it now, then it wouldn't be considered pre-existing and it would pay out once you take your leave for delivery. Short-term disability automatically rolls into long-term disability. So if you're out on short-term disability and you exhaust those days, but you're still not released to come back to work, long-term will kick in at some point. So if you sign up for short-term disability, you will not see the option to sign up for long-term in the enrollment system because it automatically is set up to go from short-term to long-term. If you waive short-term disability, then you will have the option to sign up for long-term disability. Long-term disability works the same way. You have your elimination period, except they're 60, 90, and 120-day elimination period. That's how much time you would have to miss from work before you could file the claim. And then you have the percentage. So who else would go on short-term disability? People that might be the breadwinners of their family. They might be a sole income of the family. And if they were to miss time from work, exhaust all their days in their bank and stop getting Alvin paychecks, if it puts your family in a bind and could really hurt you financially, you might consider investing in short-term disability to help you in those situations. The long-term disability, if you have a lot of days in your bank and you don't think you would need short-term because you would be able to cover paychecks, but if some catastrophe happened, someone with a lot of days in their bank might choose long-term disability. These policies are so good for so many people, but they don't have to be for everybody. So my team and I would love to talk to you more about these products to see if it meets your family's needs. And just give us a call, shoot us an email. We'll be happy to help you and go over it in more detail. The next policy or benefit we're going to talk about is our voluntary life insurance policies. They're through Mutual of Omaha. The important thing to know about voluntary term life is an affordable premium, meaning what you pay for out of your paycheck for a larger benefit. what would be given to your beneficiary if you passed away. So because we have a large group, a lot of employees that participate in this, the rates are very affordable. So for pennies on the dollar, you would pay a premium, and the death benefit itself would be a larger amount of money. That's the only benefit. If you passed away, your beneficiary would get your death benefit. If you signed up for spousal insurance, term life, and your spouse passed away, you would get that benefit. But it's based off of age, and every 5 years or so, your premium is going to go up. And if you reach a certain age, 65, the death benefit will go down. So I have 4 kids and a wife. If I was to lose my job or get hurt or pass away, my wife would be in a tough position. So I take out a lot of voluntary term life on myself, because if I passed away, that benefit would help her out. She'd be able to pay off, our cars, the mortgage, whatever she needs it for, help with college. So I encourage everybody to understand what voluntary term life is. Think about what you might need if you passed away or your spouse did, to help your family at that time. Voluntary AD&D is the AD&D stands for accidental death and dismemberment. And so similar to voluntary term life, you pay a very small amount in premium for a large chunk of a death benefit, but the AD&D means that you have to pass away from an accident. I don't deem anyone's death an accident. That's the insurance company's decision. Most common would be a car wreck. And so if you purchase this and you passed away in an accident, your beneficiary would get that benefit, the death benefit. And so I don't like people just brushing these two plans off. You can go in there and plug in what number, dollar amount, and you can see what it'll cost you per paycheck. You might be surprised at how affordable these are. So please take the time to go into the enrollment system. Make sure that you have the amount that is appropriate for your family, and you can increase it during open enrollment. So it's smart to do. Please reach out to us if you have any questions on this. If you need to understand the difference, we would be more than happy to go over this with you. I'd like to talk to you a little bit about some key terminology when it comes to our voluntary life insurance policies. The first one is guaranteed issue. You'll see this a few times in the enrollment system, also known as a GI. Guaranteed issue is the dollar amount that you are allowed to receive of life insurance without needing to complete an evidence of insurability. The guaranteed issue varies for different people. New hires have a guaranteed issue. Employees that currently are enrolled in life insurance will have a different guaranteed issue. And then employees that have never participated before, they don't even have a guaranteed issue. So it's important to understand that when you go into the enrollment system and you select a dollar amount that is a guaranteed issue, you will not have to provide EOI, which is evidence of insurability, which is also it's a questionnaire. And the carrier might want to schedule a day where you have to provide blood work or a urine sample to see if you are insurable. Evidence of insurability or proof of good health may be required if you are a late entrant and or if you request additional coverage above your guaranteed issue amount. So keep that in mind in the enrollment process and make sure that you fully understand what the GI, guaranteed issue, is, and the EOI, the evidence of insurability. Next products are the voluntary products, also known as ancillary products or supplemental products. These are through MetLife. There's 3 of them. I'm going to talk to you about all 3, but we'll talk about the first 2 together. First one is accident insurance. Second one is hospital confinement. The way these work, think of them as cash-based insurance policies. They are not health insurance. They will help supplement your out-of-pocket expenses if you have something happen. So let's use an accident. You slip and fall, you have an accident, you tear your ACL, you will go to the doctor, you'll use your group health insurance for the doctor's visits, you'll use your group health insurance for any surgery, physical therapy, but because it happened as an accident, and if you purchase this, you would be able to file the claim with MetLife, and they would send you cash to help offset some of your medical costs. So it's just a way to protect yourself and recoup some money that you come out of pocket for that accident. The hospital confinement works the same way. You pay for the product, out of your payroll deductions. Let's say you were admitted into the hospital for whatever reason. Your health insurance is going to pay for the hospital stay, but you'd be able to file a claim with MetLife for your hospital confinement and recoup some cash to help pay yourself back for out-of-pocket expenses that you spent for the hospital stay. So if you're accident prone, you might consider this. If you have kids that ride dirt bikes, play football, it might be a good benefit for you. If you're someone that has never gone to the ER, that never has accidents, it might not be a good product for you. If you have an illness or something that might put you into the hospital from time to time, you might consider the hospital confinement option. If you never go to the hospital, if you have never been admitted, this might not be the benefit for you. But they're there if you need them. They're voluntary. The third one is the critical illness, also known as a cancer plan. And this one's a little bit different. It comes in increments of $10,000, $20,000, $30,000, $40,000, and $50,000. So you select your dollar amount that you would want the benefit. Obviously, the richer the benefit, the more it's going to cost you per paycheck. It's based off of age, so the older you are, the more expensive it's going to be. But if you sign up for this and sometime throughout the plan year, you're diagnosed with a chronic illness like cancer or heart disease or have a stroke, you would be able to file the claim with MetLife and recoup that cash benefit that you elect during open enrollment. So if I signed up for $20,000, I'm going to pay a premium out of every paycheck. If I never have an illness, then that premium dollars is just spent. But if sometime throughout this year I was to go to a doctor's appointment and end up having some sort of cancer, I would be able to file the claim with MetLife and recoup that $20,000 to help me with out-of-pocket expenses. It could be anything. It could just be lost wages. It could be parking at MD Anderson. It could be the cost of prescriptions. But it's there to help supplement the medical costs. So don't get these three confused as health insurance. They're just supplemental insurances that people purchase to help them with out-of-pocket expenses when things happen. The next product we're going to talk about is another life insurance policy. This one is called Universal Life. It's through Transamerica. And Universal Life is similar to whole life, but it's completely different than term life insurance. We spoke about term life where it's cheaper premium for a large death benefit, but the only benefit is if you really pass away. Whereas universal life comes with an investment piece. So you're going to pay your premium. Part of your premium is paying for the product itself. The other part is going to go into an account that has cash value. And it comes with an investment opportunity. So if you purchase this product early enough and you keep it for a long enough period of time, you'll still get the death benefit if you passed away, but you also have an investment piece. And if you keep it long enough and it grows big enough, when you reach a certain age, you'll be able to do something with that money. So a young employee might consider purchasing this, get locked in at a young age, and just pay for it for the next 10, 20, 30 years, and eventually they'll have a cash value that they have options with. Whereas if they chose a term life, there's no other benefit other than unless they pass away. You could purchase this on yourself and for your spouse as well. We had a lot of participation in the MetLife Legal plan, which previously was a year-round open enrollment. So much so that we put it into the enrollment system this year. So for the first time, you'll be able to see MetLife's legal plans in our enrollment system. And this is the benefit that allows you to cover the cost of a wide range of common legal issues with the legal plan conveniently paid through payroll deductions. It allows you access to experienced attorneys to help with estate planning, home sales, tax audits, and more. We are excited to have MetLife Legal Plans in the enrollment system, but if you have questions or need more information about it, please reach out to my office and we'll be happy to share their paperwork with you to see if it's a good fit for you and your family. To recap the different life insurances we have the basic life, which is free from the district, $10,000 if you sign up for medical insurance. If you sign up for the HIB, that one goes up to $50,000. We have voluntary term life and voluntary AD&D. Those are, again, more affordable for a larger benefit. And then the third one is the Universal Life through Transamerica, which is more expensive premium for a smaller death benefit, but it comes with the investment piece. So we like to try to give everybody options, and it's y'all's responsibility to understand the difference of them so you can choose what's best for you. And again, my team and I would be more than happy to go over these with you to make sure that you're choosing what's best for you. Alvin ISD also offers a few year-round benefits that are not in the enrollment system. You can sign up for one of these three anytime you want, and we can help you get started on that. The first one is our retirement and investment benefit. It's a 457. It's through the ISC group. You can email them at aisd@iscgroup.com and just tell them you're interested in signing up, and an advisor will call you back, schedule an appointment, and you could talk to them about the benefits of putting into a retirement account. You could also call them at 800-888-3520, and an advisor will speak with you. Obviously, you don't want to wait on investing. Get in as soon as you can, whether it's a dollar amount or a percentage of your paycheck. And one of the beauties of working for Alvin ISD is that we have a matching program to this. So if you if you put money into a 457, the district's going to match into a 401 based off of your attendance. There's only 1 or 2 districts in the state that do this. So I encourage all of our employees to contribute to a 457 or a 403B so that you take advantage of the district's matching program. ISC Group will answer any questions you have, so give them a call, or feel free to shoot me an email or give me a call and we can discuss it as well. If you need to get in touch with us, our contact information is here. We also want to encourage you to look at our website, alvinisd.net, under the Careers tab, then Benefits. The enrollment system itself is going to provide a ton of information once you get in there, but do not forget to have this video pulled up along with the presentation when you go through enrollment. My team can assist via email, but we think that with these tools at your hands, at your fingertips, you'll be able to navigate the enrollment system and sign up for the benefits that you need. We are always here for you year-round, but as we go through this enrollment process, please take advantage of us and let us be there to help you. It's my pleasure to serve Alvin ISD and to provide these benefits to y'all, but my favorite part is to be able to educate you on the differences of them. So please give me a call anytime, and hope you have a great school year. Thank you so much.